Good morning and welcome to the Killik & Co market updates. It's been another week in which US politics has had an impact on the market. This week, the House of Representatives in the US has voted to impeach Donald Trump, and that makes him the first president in history to be impeached twice. The next step would be a trial in the Senate, and that's unlikely to take place before his presidency ends on the 20th of January, but it would still be allowed to take place after his presidency has ended. If found guilty, he would not be allowed to run for president again. However, Joe Biden is actually in favour of the trial not taking place, the reason being that the Senate can only handle one piece of business at a time, and if it were busy with a trial, that would mean that any legislation that Joe Biden wants to push through would have to be pushed back. Yesterday, Joe Biden outlined the details of a new $1.9 trillion stimulus package that he describes as his top economic priority. To put that into context, at the start of the pandemic, the US government signed off a package worth $3 trillion, and at the end of 2020, they signed off a further package worth $900 billion. So a further $1.9 trillion is an additional stimulus that is really quite sizable in measure. Joe Biden would like to use about 1/4 of this new money to fund direct payments to individual Americans worth $1,400 each. We know that the stimulus checks that were used at the start of the pandemic did largely find their way into the stock market, pushing up the share prices of some well-known brands, and there's no reason to suppose that that couldn't happen again. The Trump administration seems to be using its last few days to increase pressure on China, and it has just added Xiaomi, which is the third largest smartphone manufacturer in the world, to a list of companies with suspected links to the Chinese military, and that means that US investors are no longer allowed to own the shares, and the news of the company being added to this list sent the shares down by over 10%. To put into context how large this company is, we've just put together this chart showing the market capitalizations of a few well-known companies. As you can see, Xiaomi has a market capitalization of $95 billion, even after the share price fall that happened this week, and that compares to $157 billion for Unilever, which is currently the largest company on the UK stock exchange. Still much smaller than the largest tech companies in China, Alibaba and Tencent. Apparently there were discussions in the US about adding those companies to the list too, and it was decided not to do that because that would have harmed a number of US investors. However, investors are still likely to be concerned just at the knowledge that this was even discussed, and we're sure that investors are waiting very keenly to hear more details about Joe Biden's expected approach to China. Here in the UK, the latest GDP numbers have come out showing that our economy contracted by 2.6% in November, and this has led to some commentary about a so-called double-dip recession. If you have a look at this chart here, you can see that our economy contracted in March and April of this year, around the time of the first lockdown, then it recovered somewhat, and now it seems to be heading down again, so that would be the double-dip recession. However, despite the contraction of 2.6% that was announced this morning, that was actually far better than expected, helped by a positive contribution from the construction sector. And it also has to be said that the UK is doing very well in terms of its vaccination rollout programme in comparison to other countries, and that has to bode well for the future economic growth of the UK. Moving on to have a look at next week, we've got results coming out from Goldman Sachs, Procter & Gamble and ASML. That's it from us. Enjoy the weekend, and we'll see you next Friday.